In this video, I'm going to be talking about SoFi and the wheel strategy. We have a very interesting opportunity right now because SoFi is pulling down. We have some volatility in the market. My SoFi position right here, I have 3,100 shares, but I want to acquire more shares of SoFi because I believe we are selling it for a discount. The market is undervaluing SoFi. And I specifically want to cover the wheel strategy and how I would be using it. Real quick, the wheel strategy is essentially a system. It's a process for getting into high quality companies. You should definitely want to own the stock. And the wheel strategy is a simple method for collecting premium. Very simple. Sell puts to get in. Once you're assigned, sell covered calls to generate income. Once you're assigned, rinse and repeat. Okay. So I want to show you right now how I would do this for SoFi stock. The first thing I'm going to do is go to trade SoFi options. Again, the most important part of the wheel strategy is we want to own the stock. Okay. So when we sell a put option, you can't second guess yourself. You have to be pretty confident that this is a stock that you want to own, because when you sell a put option, you are basically saying, I will acquire this stock at this strike price. Okay, so I'm going to go to sell put option and I'm going to go for 30 days out roughly. Okay, 35 days in this expiration, December 19. I personally love traditional expirations. Traditional expirations are the third Friday of every single month. Now, I sell options on the third Friday because they have the most volume of traders and the most liquidity. So the third Friday is the best. Now, this expiry right here is going to be roughly 1 month out. And as you can see here, the premiums for SoFi are really nice. So I'm going to expand the $26 put option here. You can see the implied volatility is 76. This is what's known as high implied volatility. High implied volatility happens when the market is uncertain. Investors saying that, hey, we don't know if the stock market is going to go up or down. Therefore, we are going to price options more expensive because more can happen. We need to be compensated for the risk that we are taking, which is actually a good thing if you're an option seller. Higher volatility makes higher premium. Higher premium makes you make more money. You make bicep over tricep money. So I'm going to go for selling the $26 put right here. And essentially, market is going to open up in a few minutes, but I'm going to execute this trade. And then I'm going to do nothing. I'm going to wait until the option expires. There's very low management with the wheel strategy. The benefit of the wheel strategy is it's a fantastic retirement strategy for investors to utilize on a monthly basis. That means once you sell a put option, you don't have to do anything since you like the stock that you're selling a put option on. So you don't need any crazy techniques. You just need to sell an out of the money option with a delta that's around 30. Notice how I didn't even know we're at 30 delta. 30 is about my sweet spot. It can be 35, it can be a little bit less than 30, it can be 20. Just understand that out of the money options are profitable because you save money versus buying the stock. Because an out of the money option, if you get assigned, is cheaper than buying the stock today. So would you rather buy SoFi at $27 or would you rather buy SoFi at 26? Obviously 26. But how about this? You actually get paid premium $149, which is a pretty nice return. I'm going to put it up on the screen right here. For 1 month of waiting to get assigned and get a discount. Amazing, amazing stuff. So when you sell a put option, you are getting the premium. And once you have the premium, right, you're good. That's in your account. You can go spend that on some food, some vacations, or whatever you want to spend your money on. And you just wait, just hang out, okay? Here, the volume is very, very high. SoFi is a very popular stock for good reason. Good implied volatility, solid business. I talk about SoFi very often on this channel, but the wheel strategy, man, it's undefeated on SoFi. If you want to make all sorts and all kinds of money, really take yourself to the next level, SoFi, good company, and selling out of the money puts is going to be very hugely advantageous. The bid ask is also just amazing. The tighter the bid ask, the better, because there's less slippage cost, okay? When there's a big, wide bid ask spread, you're losing money, okay? To execute on a trade, you're going to be right at the midpoint. That's why the mark here is 151. You know, it's somewhere in between, right? The bigger that gap is, the more money you're missing. So step one of the wheel strategy, sell a put option and wait because you like the stock. Either two things happen, three things really. It goes up, okay, that's fine. You just made money in the premium, it expires, you do it again. SoFi slightly goes down, but it doesn't hit 26. That's great. That's like the ideal scenario because everyone out there in the world is losing money on SoFi or whatever stock, doesn't have to be SoFi, while you have collected premium and the stock came closer to your strike price, but it didn't hit your strike price. So actually with selling a put, the best feeling you ever get literally is when the stock slightly comes down and you're like, wow, I'm a genius. Everyone lost money, the stock went down. I am even closer now to buying it and I made money already. amazing, right? If it goes below 26, you got to buy it at 26. If it goes to 0, you got to buy at 26. Obviously not 0, right? But no matter where it is, you have to buy at 26. And that's fine. If you determine ahead of time, this is where you want to own the stock. So selling a put, 26, once assigned, you go into step number 2. You go into the second part of the wheel strategy. And once you're assigned, let's say that we got assigned at $27. You go into step 2. Let's say we have 100 shares right now. We start selling covered calls. So I go to sell call, and there's a few different strikes that you can pick. Let me touch on strike selection right now. If you go further out of the money, right? If you want to focus on income, go for a little bit higher on the delta. Here, the delta is really pretty high, but you're also going to make crazy amounts of money. Like literally what 280 is like 10%. Okay. So this is a 10% return in 1 month. That's amazing. You can see how your break even here is $30.91. But if you're bullish on the stock, you got assigned, but you want some upside and capital appreciation of the stock going up itself, you can also go higher. So for example, you can go for 30. You're going to make less money, of course, because the further the option is out of the money, the lower the premium is going to be. Here, the delta is also lower. So instead of 57, it's 45. Still high delta, but it's lower. The volume here is massive, by the way. It's 9,000. So a lot of people are buying call options on SoFi. They're bullish, right? But look, if you sell 30, you're going to get less premium up front, which is less of that cushion, that less income, and then you get more upside because now you get a whole extra $1 of upside in terms of your break even. You're $2 higher in your strike price, you're lower on your premium, and your net difference here is a little over $1, okay? So you can make as much as $32 on this position because, yeah, 30 is your strike. If it goes up higher, you have to sell at 30 no matter what. You get $2 of premium. This is a great way to enter into stocks for cheaper prices. Again, it doesn't have to be SoFi. We have a lot of volatility in the market, by the way. And I just want to tell you that the wheel strategy is actually very good for volatility because when you sell put options and you sell them out of the money, you have cushion. So that's really nice. Let's go for American Airlines. This is actually a position I have expiring next week. I love American Airlines. Super consistent stock. It really just goes sideways a lot, which is actually really good. So American Airlines right now, it's at $12.82, and I just sold the $11 put. I have made really good money. And what's going to happen is once this option expires in the next few days, then essentially what I'm going to do is just sell another put option. So as part of the wheel strategy, if you don't get assigned, that's fine. You just get to sell another put option. If you do get assigned, just understand that getting assigned is part of the wheel strategy. It's not failure. It's a good thing to get assigned. You want to get assigned because once you get assigned, you go into the next phase of the wheel strategy, which is then selling covered calls. So never be upset with yourself. Just make sure that you absolutely love the stock that you're selling put options on. I've held personally SoFi for a very, very long time, for many years. The PE ratio is 53, which is a little bit high, but the good news about SoFi is that because it's growing so fast, because they have not that long ago become profitable, they are now in that inflection point where this is the 0 line for earnings, and now their earnings are going up. So I expect the PE ratio to drop significantly over the next 12 to 24 months. Now, I wanted to talk about the wheel strategy and really get into these deep details. So I used to work on Wall Street at Goldman Sachs, and something that I really learned was that a lot of clients were looking to preserve wealth. They were not necessarily looking to generate that much wealth. I noticed that a lot of clients were selling put options, covered calls to generate income. So they were selling options that were at the money, right at the money, wherever the stock was trading at. And many of them, since they were CEOs and high-powered individuals, they had huge positions and they were just looking to preserve. But I have kind of adapted that strategy myself for the last decade of trading, and I have learned that for me, there's a sweet spot to selling options, which is a 30 delta. I like monthly options. I think they're very simple and easy to kind of follow because weekly option trading is very active, and then beyond the month takes, some time to expire. So for me, the 1 month mark is a very efficient and easy expiration date to try. Selling puts to get in, covered calls to get out, paying attention to your average cost. So my average cost on SoFi is pretty low. And the good news is that you don't actually have to even sell a covered call. You can get assigned and wait to have an increase in the stock and then sell a covered call later. And that's up to you. I'll talk more about timing. Timing the market is very difficult, so I don't recommend it, but it's okay to hold stock because in the long-term grand scheme of things, high quality companies rise. So you don't always have to do the covered call right away. So you have a choice. Do you hold on to the stock a little bit and then sell a covered call? You should eventually sell a covered call, but the timing of it is not super important. It is based on technical analysis, but I would say more than half the time I just sell a covered call right away, especially if the stock is only down a little bit. The only time I actually really hold the stock and not sell a covered call right away is if there's a really big decline, okay? Now, a really big decline, it doesn't really happen that often, and that's why I said more than 50% of the time, I just sell a covered call right away. Because the wheel strategy is very easy to run in most markets. Like the stocks are not jumping up that much. You don't want to use the wheel strategy on crazy AI, brand new stock, the full philosophy and knowledge on running the wheel strategy. It's okay to finish the life cycle. Selling a put, a covered call, and then getting assigned on the covered call, you essentially will lose your shares at a higher cost basis, right? So you have an average cost of 24, and then you get rid of it at 26. That's cool. You made $2 per share, plus you collected premium on the sell put side, and like basically step 2. In step 3, you collected covered call income, and then you get out of the stock. So you've made money 3 times. You've made money selling a put option, you've made money doing the covered call, and then you made money on the capital gains, capital appreciation of having an average cost of 24 and then selling the stock at, say, 26. And if you're assigned at expiration, you go back to step number 1. You have finished the full life cycle, and then you start selling put options yet again. You start all over again, you rinse and repeat. Man, this is a really powerful strategy. It gets me excited even just to talk about it, because I think so many people can reach retirement by running this simple strategy. You don't have to recreate the wheel or do any crazy strategies. In my experience, I have been running the wheel strategy for basically almost 10 years since I started trading and learning, and it has really helped me personally achieve retirement, as well as the other coaches in the program. Other coaches are also 7-figure coaches, and we have all been using very simple philosophy. As I was a long-time coach here, I have many years of experience. The coaches that I work with, they use a very similar strategy. They learned from me, but then they altered it into using the wheel strategy and changing the delta a little bit, looking at more innovative stocks. It's really a flexible strategy, but this is, in my opinion, the best blueprint that you can have is pick a high quality stock, SoFi, great company, and run the wheel strategy by positioning yourself to enter the stock for a discount, selling covered calls to generate income. And in terms of position sizing, I would say that you're safe to basically use 10% of your money in SoFi, or really you don't have to use SoFi. This is an example. I personally like the company a lot, but you can use other companies, whether it's maybe Tesla or Nvidia or Palantir or other stocks in your portfolio, safe stocks. Maybe you have blue chip stocks, the big blue chip stocks in the S&P 500. Those are great as well because they are predictable, they're safe, and the wheel strategy is a moderately bullish strategy. So a stock that has moderate bullish activity that over the long term goes up, the wheel strategy just helps you acquire more shares of that company and also helps you generate money and consistent income on stocks that you already have. All right, guys, if you enjoyed that quick tutorial on SoFi stock and how you can make money using the wheel strategy, and you want to make bicep over tricep money, you really want to take it to the next level, you want to create income, then make sure to click that first link in the description. I am coaching and I'm showing you all the plays that I make to scale your portfolio. And during tough, volatile times, I'm going to be in your corner helping you throughout the journey of the market. So make sure to click that link in the description, and I'll catch you in the next one.